Well, clearly the findings so far of the Royal Commission have been truly extraordinary. The companies that have been involved have shown that in the main they have poor governance structures, incentive and alignment not in the interests of the customer, and more focused on short-term profit revenue and in keeping the share price going. Now we really feel that the impacts of these findings will both force and influence, hopefully for the positive, these companies to move more towards putting the customer first and to be focusing on what they can do to ensure transparency, focus on fees, and putting shareholders at least equal to investors. I think one of the major things that has come out is that the structures around vertical integration, basically advisors selling home-owned product, are going to get dismantled. And we think that the opportunity for independent advice is likely to come stronger to the fore going forward. We see all these as very positive for, again, the benefits of clients and customers being able to save for their retirement. Our managed portfolios are built to be able to insulate our customers from any single event. And we're very pleased to say that through this last 2 months of big volatility in our industry, then they have continued to deliver positive returns every month. The important thing when it comes to the financial services sector in Australia is that there are more than just the 4 big banks to consider and opportunities for investors. There are really 4 parts to our financial services sector in Australia. There are the big 4 banks that dominate what we call the mortgage and retail banks, but also 3 other really important areas. One is the advice industry, particularly AMP and IWF, the insurers focused on life and general insurance, along with private medical insurance, and lastly, the pure play asset managers. Now, if you think about the sector as a whole, Morningstar managed portfolios have generally been underweight or have low exposure to the big 4 banks. We've had an increasing exposure to the insurers, both the medical insurers like Medibank and the general insurers like QBE, that have really been a lot more progressed on their journey towards being very customer focused. They are focusing on simplicity and customer focus, which has meant that in the short term they have given up short-term profits towards structuring their business more for longer term. That's been a great opportunity for us to buy those companies with a margin of safety at a time when the market was looking elsewhere. And lastly, in the pure play asset managers, they've also had a very strong run, but we've capitalized on those strong valuations in companies like Perpetual and Platinum to be able to sell before this last volatility period in 2018. So all in all, we do have quite low weights to the financial services sector, mainly between 2 and 4% of portfolios, which effectively means that all this recent news and media hype has really not impacted the portfolios whatsoever. This is really a very important issue because clearly clients look to their advisors and to the investment management industry for trust, to give them comfort and an ability to sleep at night when it comes to investing their hard-earned savings. So I'd say a couple of things. Firstly, ensure that your clients can see and be aware of the fees that they are paying in any investment product. And Morningstar will continue to focus very, very squarely on transparency of what we are invested in and the cost of what we are invested in. Secondly, stay diversified. Multi-asset portfolios are made to try and insulate customers from any single event. Any one company, despite kind of how good it looks from the outside or how good the media is saying things about it, look, anything can happen, and the price often reacts very viciously to any company that's looking very attractively valued. Lastly, it's really important that these big 4 banks are on a journey now of starting to simplify. Some will be forced upon them, some they'll do themselves. They are really good companies at heart, and we think they're good opportunities for potential investments in our managed portfolios. If they simplify and change their structure, then we'll need less of a margin of safety to think about investing when the price is below intrinsic value. I think there could be a chance for some of the big four banks to come into our portfolios in future if we see that opportunity of price and fair value.
Any advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.